Hey guys, this is Forum 360 on Western Reserve PBS, where we have a global outlook from a local view. Every year around June and July, it's a great time to focus on mid-year tax considerations. I know it feels like you just filed your 2022 tax return. And setting aside time for mid-year tax planning can help you save on your 2023 tax bill and eliminate surprises when it comes to time to file next year. Our guest today is Antonio Gobson, a certified public accountant, also known as a CPA, with Apple Growth Partners. Antonio will share with us mid-year tax planning tips for individuals and small businesses. Hey, Antonio.
Hey, what's going on, Ashara? How you doing?
I'm doing well. How are you?
I'm doing okay for
How's
a Monday.
How's the CPA world treating you?
You know, CPA world is treating me amazing.
Pretty busy?
Absolutely, super busy. As a matter of fact, as a matter of fact, second quarter estimated tax payments are rolling around.
Oh so, my God!
Yes. So that's keeping
coming
me busy.
Fast.
Absolutely,
yes,
100%.
June 15th.
Absolutely, yep.
When this airs, it'll actually be after the deadline. So I hope they're working on that.
Most definitely.
But can take some tax planning tips for the mid-year out of this conversation. So
absolutely.
So tell me a little bit about yourself.
Well, first and foremost, Ashara, I just want to say thank you for sharing your platform with me and giving me the opportunity to come on here. I just want to say that you're doing your thing. You are doing amazing things in the financial world.
Thank you.
So that's first and foremost. I just wanted to give you your kudos and give you your flowers when it comes to that.
I appreciate that.
No problem at all. As you said, I'm Antonio Gobson. I grew up in the city of Cleveland. Graduated from Cleveland Central Catholic High School. From Cleveland Central Catholic, went to John Carroll, where I got my bachelor in accountancy.
I did not know you went to John Carroll.
I'm a Blue
That's
Street.
So awesome.
I'm a Blue Street.
Okay.
And then from there, I got my Master of Business Administration with a concentration in taxation from John Carroll University.
That's amazing.
And then I got my CPA, and I've been doing that for a little over 10 years now.
Very nice.
Yeah.
That's awesome.
Thank you.
So
Appreciate
what
it.
made you choose accounting?
What made me choose accounting? So I always loved math.
Okay.
I always loved math. I did well in my math classes in college. And the professors and the administrators, John Carroll, they just pushed me into the profession, and I'm loving it ever since.
Very nice.
For sure.
Very nice. I love hearing the backstory before we kind of jump into
All
the
good.
business.
Most definitely. All
helps
good.
us to connect with our guests a little more.
For sure.
So,
for sure.
So let's talk about mid-year tax planning. So what exactly is tax planning?
So to me, tax planning is being able to implement different tax strategies, all the while considering the tax code.
Okay.
I mean, because we all want the same thing as tax
Absolutely.
professionals. We want to limit the tax liability as much as we absolutely can for our
Get
clients.
that tax bill down.
Absolutely, get that tax bill down 100%.
Yes.
And it can be in the form of deductions, in the form of different types of tax credits. We just always want to have that open line of communication with our clients and just be transparent with everything and honest.
Yeah, that's very nice. I mean, just to talk about a little bit the keeping an open line and transparency with your clients. You've been preparing taxes or just in the profession for 10 years.
Absolutely. It's crazy, right?
Yeah. So is that one of the key things that you try to work on with your clients, is just having a good line of communication?
Absolutely, 100%. And me personally, I love to talk to people. I love to interact with people, with different types of people. So it's nothing for me to just pick up the phone or, send out a quick email regarding, hey, how are you doing today?
Okay.
Is there anything that I could help with? You mind sending over your quarter 2, quarter 1 financial statements for, so just we could, just look at anything just to see if anything jumps out, any crazy expenditure, any crazy revenue number.
Yeah.
So yeah.
Because clients sometimes don't know how often they should bug their professionals.
Absolutely,
like
100%.
Their accountants, their financial planners, their lawyers. So
I agree.
Do you feel like most of the time you're starting that communication, or do you see your clients kind of sending over those emails?
You know what? Most of the time I feel as if I'm starting the communication, which is
Which
fine.
is good. Yeah,
which is fine.
Because they don't know.
Exactly.
They don't know how often they should
Exactly.
be communicating.
I
So
agree.
that's great.
Agreed, 100%.
Yeah. So Why is it so important to be proactive with tax planning?
It's important to be proactive when it comes to tax planning because you don't want to miss anything. You want to provide your client with the absolute best service that you can provide them with. You don't want to miss anything. You want to have time to be able to analyze anything that you absolutely necessarily need to analyze for your client. As a matter of fact, case in point, one of my real estate clients in 2021, they were thinking about doing a capital expenditure for 2022. And after we looked over everything, it was a non-residential building. And after we looked over everything, the expenditure, it qualified as improvement property. Meaning that it qualifies for bonus depreciation. Now they were thinking, whether or not if they should do this expenditure in 2022 or in 2023. And reason being is because there was a potential cash flow issue. So I told them like, hey, if you do it in 2022, the bonus depreciation rules are still going to be 100%. If you do it in 2023, that's the first year where it goes down to 80%, meaning that 20% of that 20% of that deduction or that expenditure, you're going to have to capitalize it and take that over 39 years, which is no fun. So so he went back to his partners, he went back to the management team, and they decided that we're going to go ahead and just knock it out for 2022.
Very nice.
And that's all about just being proactive and having those open lines of communications with your client.
Yeah, very nice. Any other conversations recently you had to have with clients similar to that with the changes? 22 was different as it relates to taxes. A lot of the pandemic relief credits went away. I mean, we had the child tax credit, went back to $2,000. We had so many different things that just changed. So did you have to have conversations with clients, and just in your industry, because things are different based off of your clients?
For sure.
But did you have to have in 2023, any conversations with clients about pandemic credits kind of going away?
Most definitely. Like we said, earlier, we just want to keep those lines of communication open. And I feel like it's important to me to, let them know, like, hey, this is not going to be here next year. So, we need to take advantage of it right now. And just stuff like that. So yes, 100%.
And then having the conversation in June or July to give them time to process.
Absolutely, 100%.
How important is that?
No surprises. It's very important because, no surprises. We want them to. We want to give them the absolute best service that we could possibly give them. So,
and if you give them enough time to process, take it back to their management team, and like the example you gave, they can make an effective decision.
I 100% agree with you, Ashira.
I like that. I like that. So what is the difference from tax planning and tax preparation?
So tax preparation is pretty much gathering all the necessary documentation. W-2s, K-1s, any 1099s, any schedules that your client may give you. It's gathering all that necessary information and formulating it into a product that you and I know as a tax return.
Definitely.
Now, tax planning, on the other hand, is taking that same methodology, but it's taking it a bit, further. It's saying, hey, client, what can I do? What can we do in order to get your tax liability down or get your cash flow as high as we can possibly get it, because we want you to, pay as less tax that you are 100% required to pay.
I like that. That makes sense. That makes sense. And when it comes to tax preparation,
yes, ma'am,
that occurs annually, right?
Absolutely.
And tax planning, how often should that happen?
Well, honestly, like we said prior, it's all about just having those lines of communication open. For some bigger clients, maybe you need to see those quarterly financial statements. So you can see if they did something maybe out of the ordinary. And if they did something out of the ordinary, maybe you can ask them like, hey, what does this expenditure relate to? Hey, revenues have been X, during Q1 and Q2. Why are they so much higher in Q3? And that way you can with the tax planning aspect of it, you could really hunker down and just you figure out a way that within the confines of the tax code, that you could get their tax liability down.
I like that. That makes sense. So tax planning is continuous.
Yes,
The
always.
conversation,
Absolutely.
it never stops.
You got it.
You're constantly wanting to keep the conversation, that line of communication open.
I like
Where tax planning
You got it.
can just happen annually.
You got it. Yep.
Okay.
Yep.
Okay.
Absolutely.
Just to make sure our audience really know, because I mean, a lot of people don't know. I mean, hiring a CPA is a huge part of the business process.
Absolutely.
It's not easy. A lot of people don't even know kind of where to start.
Agreed.
So
I agree.
just letting them know
Agreed.
these differences, I think, is very important.
I
So,
agree.
thank you
I
for
agree.
that.
For sure. For sure.
So what are some events that can trigger a tax consequence?
So honestly, Ashira, a lot of our day-to-day decisions can, trigger tax consequences.
Okay.
If we want to, get a new job, if you want to
Yes.
get married, if you want to have children, if you want to, retire.
Nice.
If you do retire, are you required to take required minimum distributions at a certain age? If you are, maybe I should have some tax withheld from it because, I don't know what my tax situation is going to be.
Okay, now
Which
let's
is-
stop, because that's very good.
Okay.
So if someone is going to retire, they have to step back and think about, this is a new type of income that
Yep.
you've been saving up and contributing to this account basically your whole career.
Exactly.
But they have to stop, maybe talk to their CPA
Exactly.
about withholding.
Yep.
You have to plan for this new thing.
Absolutely.
So many different considerations that can go into it.
Which is why, like you said, tax planning should be proactive and
Okay.
it's continuous and it's very, very, very important.
I like that.
I 100% agree with you.
Okay, so a young couple getting married, they also need to do
Absolutely.
tax planning
They-
or stop and consider it.
Absolutely. They need to do the necessary tax planning and talking to the CPA too because, once you get married, the standard deduction, if you're taking the standard deduction,
Okay.
it changes, once you're married filing joint or married filing separate, whatever the case may
Yeah.
be. Or, if you're going to buy a house and you don't necessarily meet the SALT cap, the $10,000 SALT cap,
Yeah,
you're going to
okay.
have to pay real estate taxes. And those real estate taxes, they're a part of the itemized deductions on Schedule A. So, we just really, really, really want to keep the lines of communication open and be proactive and just, just put all the cards on the table and just
Yeah.
make sure that we're making sure that our clients are in the absolute best possible position that we can get them in.
Okay, so stand on line with the triggering tax consequences.
Okay.
So selling or buying or selling a business,
Yep.
that can do it too.
Absolutely.
You need to stop, talk to your
Absolutely.
accountant about different factors that goes into it.
Absolutely.
Okay.
You're 100% correct because there are all different types of gains and, under, not to get too technical,
Yeah.
but, business gains are considered 1231 gains. And under
Okay.
that is 1245 property and
Yeah.
1250 property. And with that comes unrecaptured depreciation analysis and all that kind of stuff like that. So yeah, 100%. All
Okay.
that stuff that you're saying is very, very, very important and what you need to, or the client needs to, discuss with the CPA and, just so we don't miss anything.
Okay. So why put off until tax time what you can handle today?
Exactly.
As we approach mid-year, it's never too early to consider tax planning strategies for the year that may help lower your tax bill. CPA Antonio is here to share with us mid-year tax planning tips. So, what are some basic tax planning strategies for individuals?
Retirement.
Okay.
Maybe contributing to a Roth IRA or a traditional IRA, or just keeping that line of communication open with your client. What kind of health plan are you in? Are you in a high deductible plan? Because if you
Okay.
are, maybe you can contribute to an SHA.
Okay, so what is it?
Health-
HSA.
An HSA is a health savings account, and you can put money into it if you're in a high deductible tax. If you're in a
Okay.
high deductible health plan, you could put money into it, and you can take the deduction on your tax return.
Very nice. Okay, what are some other strategies that individuals can take?
If you have any types of dependents, do you have kids? Do you have younger folk that you take care of? Maybe consider an Ohio 529 plan.
Ooh, I like that.
Absolutely. Maybe
Yeah,
consider.
I have a daughter. Well, I have two daughters.
Absolutely.
Started
Absolutely.
very young.
Absolutely,
and,
100%.
Open up their 529 plan.
Agreed.
So we can take a deduction on our Ohio return.
Agreed.
Okay.
Agreed. Just
Okay.
for saving for your child's future.
Very nice. I mean,
Right.
win-win.
It's a no-brainer, right?
I'm building my child's future
All the
while earning a tax deduction.
There you go.
Very
There you
nice.
go.
Okay.
Which is why it's proactive, like we talked about. You know, which is why it's
and
proactive.
keeping that lines of communication.
You got it.
And then
Agreed.
thinking about what's triggering a tax consequence. Right there, having a child.
Exactly. Exactly.
Very
There you
nice.
go.
Okay.
I like
You're
that. I like
you're
that.
really talking strategies.
For sure.
And I mean, these are everyday things that people don't necessarily think about.
Exactly,
That could
Shira.
have a tax effect.
I 100%
But
agree with
having
you.
that communication with a CPA and accountant is very helpful.
Agreed.
Okay. So when it comes to taking that 529 deduction for your child
Okay.
on your Ohio return,
Okay.
so is that like per child? How much can I do in
Yes.
Ohio?
Yes. So it's per child.
Okay.
And excuse me if I'm butchering this. I can't remember the exact amount every
I think
year.
it's about
but I want to say,
4,000.
you know what?
every
I think
year.
you're right. I think you're right. I
Okay.
think it's around 4,000 every
Okay.
year. But yeah, and then let's say you contribute 10,000.
Yeah. okay.
Those, that additional money that you contributed this year, it carries forward and it becomes a deduction in the subsequent year
Very
or
nice.
subsequent years.
So you're telling me that the $10,000 I possibly contribute in 2023.
Okay.
$4,000 is deductible in 2023.
Right.
But I can roll over the additional $6,000.
100%.
And pick it up in the future.
And pick it up in the future
See,
year.
This is why tax planning is so
Agreed.
important.
Agreed. 100%
Very nice.
agreed.
Okay.
Yes, ma'am.
Thanks for that.
Sure.
What are some other ways I can like reduce my income like as an individual? Like what other deductions could I possibly take?
Maybe you can contribute to your favorite charity.
Okay.
And
Okay.
I mean, because that's a win-win. If you
Yeah.
want to, you're being philanthropic all the while reducing your tax bill. If
Okay.
you can itemize.
Yes. Itemized deduction because you could take the standard deduction or the itemized deduction.
You got it.
Okay. So what are some other itemized deductions that people can take if they go that route?
Right, absolutely. If you buy a home, we
Okay.
talked about buying a home prior. The interest, the home mortgage interest,
Okay.
that's an itemized deduction that you can take on Schedule A. Medical expenses, as long as they're over 7.5% of your adjusted gross income, your AGI.
Okay. So going to the doctor.
Going to the doctor.
Paying out of pocket.
Going to the doctor, paying out of
Those
pocket.
expenses
That could
deduct on my Schedule A.
That could potentially be a
Okay.
tax deduction. So go to the doctor, right?
Right. Get that checkup.
Get that checkup.
Don't avoid it.
Don't avoid it.
So what about, when a medical doctor, the dentist?
Yep,
all of
medical
those
doctor,
things.
dentist.
Okay.
Yep.
Very nice.
As long as it's qualified health professionals.
Okay.
Absolutely,
Okay.
100%, absolutely.
Okay. What are some other maybe itemized deductions? You mentioned earlier
Yes, ma'am.
SALT.
Yes, ma'am.
What is that?
So SALT is state and local tax.
Okay,
So if
okay.
you're a W-2 employee, and of course if you live in the state of Ohio, we have so
Yeah.
many
Oh
we have so many municipalities.
Yeah.
As a matter of fact, who doesn't love Rita, right?
Oh my God. So you're talking, we got our federal tax with
Absolute-
IRS. We got our
absolutely.
state taxes with
Yep.
Ohio if you're an Ohio resident. Then we have our local tax.
Exactly.
Where you can pay taxes to the municipality that you live in.
Exactly.
Okay.
And with the state taxes and the municipality taxes, how much how much your employer is withholding, that could potentially be a deduction on Schedule A.
Okay.
But the SALT cap right now is $10,000.
$10,000. So if I pay taxes towards my state taxes, my city taxes, my real estate taxes, they're all, no matter what it is.
No matter
the
what it
cap
is,
is at $10,000.
The cap is at $10,000.
Okay.
The cap is at $10,000.
Now, do that roll over anything, or it's
Unfortunately, that one doesn't roll over.
Okay, darn.
Unfortunately,
I figured I should try. I should try.
Unfortunately, that one is year to year.
Okay. Thanks for that.
For sure, absolutely.
Okay.
Absolutely.
What about education? Sending your kids off to school.
Yeah.
College, I should say.
Absolutely. When it comes to that, there are different tax credits. You have the lifetime learning credit.
Okay.
The you know what?
What about?
I'm
what is
drawing
it?
the blank. I'm drawing a blank on the other one. But also, if you have student loan interest, and if your income, and
Okay.
if your income levels are at a certain level, you can take that student loan interest as a tax deduction.
Very nice tip. Because student loans are on pause right now.
Right.
They should be removing the pause soon. I'm seeing a lot of different news
Right, for
outlets
sure.
talks about that.
For sure.
So people will start paying on their student loans again and able to deduct the student loan interest on their taxes.
You got it. Absolutely.
And that's on the Schedule A.
No,
No. That is not on the Schedule
Right.
A.
That's on Schedule
but-
1 now.
Right, because we were
They-
talking about Schedule A, so just moving over to.
You got it.
Okay.
100%.
Awesome.
It's an
awesome.
above the line deduction. Yeah.
Yes,
So-
I like that. Just distinguishing the two.
For sure.
Because you have so many different credits, you have so many deductions.
For sure.
But initially we talk about itemized deduction.
For sure.
Schedule A. Now we just moved over a little bit.
You got it.
Okay.
100%.
I like that. Let's see. So switching over to tax planning for investments.
Okay.
So you can have interest, investments. You can invest in different things.
Absolutely.
You can invest in like real estate.
Absolutely.
Invest in the stock market.
Absolutely.
Invest in how people invest in crypto now. It's just so many different things.
Absolutely.
So what kind of things should we be thinking about if we're investing in investment or doing tax planning for investing?
Right. So we should most definitely, think of, short-term investments are taxed differently than long-term investments.
Okay, let's talk about that.
You get a more favorable rate if you have long-term investments.
Okay.
Let's say we bought a share of whatever type of security.
Okay.
And whatever type of stock. And let's say that we held it for over a year. If we hold it for over a year, then it's deemed to be a long-term investment.
Okay, so all I need to do is hold it for 366 days.
Exactly. There you go. There you go. There you go.
And that changes to a long term.
And it's going to be taxed at a
Okay.
more favorable rate. As a matter of
Okay.
fact, I believe the highest capital gain rate is 20%. Which is much lower than the highest individual income tax rate. You know what I mean?
Okay.
So,
okay.
yeah, for sure. So all that is super important. You hit
Any
the nail
other
on the
things
head.
we should consider when planning for or tax planning for our investments?
Yeah, maybe tax loss harvesting.
Okay.
Maybe you share or maybe you sell a share of your favorite security. Maybe your broker tells you that, hey, hey Ashira, this security, this stock is this is as good as it's gonna get.
Yeah.
Let's just go ahead and sell it.
Yeah.
Let's just go ahead and sell it. Let's take these gains. We had it for over a year.
Right.
We had it for over the 360.
Okay.
It's gonna be taxed at a capital gain rate, which is more favorable.
Okay.
And he also says, you know what? This security right here, this one is not doing so well, and I don't foresee this one, rising up anymore. So let's just, let's cut the losses. And let's just offset the capital gain with the one security with the
Okay.
capital loss of the other security.
And that's key. 'Cause you
Absol-
offset
Absolutely.
your losses, offsets your gains.
Your losses offset
Very
your gains.
nice.
You got
Okay.
it.
Okay. So mutual funds. Mutual funds, people can invest in different mutual funds.
Mm-hmm.
Mutual funds, some mutual funds can produce tax exempt interest, correct?
Absolutely.
Meaning that
Absolutely.
you're not taxed at the federal level.
Absolutely.
Okay.
Absolutely.
Okay. Just thinking about the different investments I'm doing.
No, for sure.
It's
There's
so
so many.
many. Yeah,
Right.
yeah.
There's so many.
So let's switch gears a little.
Sure.
So tax planning strategies for small businesses.
Tax planning strategies for small businesses. As we talked about prior with the client who I, with the capital expenditure.
Yes.
Any fixed assets? Are you going to buy a fixed asset? Are you thinking about buying that piece of machinery, that piece of equipment?
What are the different fixed assets that they can purchase for their business?
Sure.
Or what's considered a fixed asset?
A fixed asset is an asset that you're going to use in your trader business.
Okay.
So if you're a restaurant,
Yeah.
and you need that new stove,
Yeah.
that new stove could be
Okay.
that new stove is a fixed asset. If you're a real estate professional, that strip mall, that building, that's a fixed asset.
Okay.
If you're going to do any types of improvements to it, those are fixed assets.
Very nice. Okay. So we can purchase fixed assets at the business level. What about with our income? What kind of things can I do to kind of plan for like different income strategies
Different income strategies.
for businesses?
Yeah.
Like, should I pick it up this year? Should I like kind of defer it? Like, what options do I have?
Right, for sure. And, that's one of the reasons, why you and I were saying that, the lines of communication needs to be open with you and your tax professional because, like you said, with some types of income, you can actually defer it.
Okay.
You could actually defer it into the next year. Same thing with expenses, just based on the revenue recognition rules. Okay. And the same thing with expenses. Another example, one of my clients, they were having a really, really, really down year, and he was thinking about, taking a certain type of expenditure. and he was anticipating that the next year, the subsequent year, was going to be better. So we just talked, and I said, you know what? Maybe you should hold off. If we're anticipating that the next year is going to be better than this year, let's hold that expense and let's take it in next year. So it's going to, you know, reduce your taxable income next year.
Okay.
Since you anticipated
See,
to have
having that conversation.
Absolutely. Absolutely.
Looking at
100%.
your client's financial statements, seeing where cash is, seeing what
Yep.
your revenue is.
I agree with you,
If you
Ashira.
already have a loss, why pick up additional expenditures?
I agree with you, Ashira,
Okay,
100%.
kind of moving that to next year.
Yep, 100%.
Okay, I like that.
I agree with you.
Okay. So, any other like tax planning advice you have as we wrap things up?
Yeah, you know, I don't want to sound like a broken record. I don't want to sound redundant, but keep those lines of communication open. Be as transparent with, be as transparent with your tax professional as you can possibly can be. You know, find a reputable CPA. You know, Ashira, myself. You know, find a reputable CPA. You know, one that knows what they're doing, and just keep those lines of communication open.
Okay. So should we make sure we like file on time, making those estimated payments? You talked about estimated
Absolutely.
payments. Okay.
Absolutely. Make sure
Okay.
make sure you make the requisite estimated tax payments. You know, like you said, you know,
Yeah.
you want to file on time, and not only do you want to file on time, you want to give your tax professional all your necessary documentation within a reasonable time, because you want to give, you know, her or him the necessary time to do their tax analysis and get you in the best position that they can possibly get you in.
Okay. Well, thank you, Anthony. This is Forum 360 of PBS Western Reserve, where we have a global outlook from a local view.
Forum 360 is brought to you by John S. and James L. Knight Foundation, the Akron Community Foundation, Hudson Community Television, the Rubber City Radio Group, Shaw Jewish Community Center of Akron, Blue Green, Electric Impulse Communications, and Forum 360 supporters.